Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Jack Miller, Head of Global Execution Services over at Baird. We are going to discuss market structure outlook into 2022. Jack, it's great to see you again. Welcome back to Trade Talks.
Great to see you, Jill. Thanks a lot.
All right, and as we look to turn the page to 2022, what do you see as the main narratives of the past year, and do you see those continuing into the new year?
Yeah, well, really looking back at 2021, it's impossible to ignore the explosion in retail activity as the story of the year. So this was triggered, of course, with the meme stock phenomenon back in January. Things have definitely dialed back a good deal from that level. But if we look at the TRF volumes, which is as a proxy that includes retail, we're still running at 43, 44% of volume versus a historical of around 36%, which does lead me to the conclusion that we do have new investors entering the market. One thing that I'm going to be curious about in the new year is if we do enter a period of sustained market volatility, what happens to this trend? Do these new investors stick around? Worth noting, obviously we've been in a sustained bull market for a while now, and I'll be curious to see what happens if that changes. And frankly, indeed, with a little bit of an uptick in the volatility that we saw last month, we did see those ratios tick down. So that's something I'm going to be focused on into the new year.
What about the outlook for institutional investors specifically?
Yeah, well, one observation about the whole retail phenomenon is that this is really somewhat independent of what we see in the institutional space. So among our fundamentally oriented institutional clients, which is the core focus of our business, unless you're directly involved in the GMEs or the AMCs, this is largely something that's fascinating to watch, but has somewhat limited applicability to your day-to-day. The impact it does have is just an increased dislocation between the amount of volume that you see on the tape and the true institutionally relevant liquidity. And so we have to manage expectations around what's actually out there as liquidity that I have a real opportunity to interact with. It does remain a really challenging environment to find liquidity. I think more and more institutional volume, we do see that bunching towards the close in the last couple minutes of the trading day. And correspondingly, it's thinned out during the middle of the trading day. And the last point I'd make, in one area where this will be as an active vehicle as well.
And we've now seen the first few acts of the new administration and regulatory regime. What do you think is in store in the world of market structure as we go into 2022?
Well, I think we've seen the heat dialed down a little bit on some of the topics that really came to the forefront in the wake of January and February, such as payment for order flow and that conversation. Really, these had to come up as a reaction to the events of earlier in the year. I wouldn't be surprised to see those topics continue to fade a little bit. But as I said a year ago, in a similar conversation, I do still think we're going to see more focus on general investor protection and also laying the framework for some of the more nascent asset classes out there like crypto. I do think one observation I have, though, that's encouraging is we really are seeing more market-driven rather than regulatory-driven changes and innovations. And so something like Nasdaq's mellow order type, which has been around for a few years, is an example of that. And we're seeing real effort by exchanges and other market venues to solve problems on behalf of investors without necessarily going back and rewriting the rule book, which always has some unintended consequence when we do that.
All right, Jack, we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.